Hello, Terrence Brogan here for the Brogan Group Equity Research Division of Wellington Shields. Wanted to talk about what's in the news today, and that is SVB. They went bankrupt last week. Pretty much they shuttered the doors on them. Uh, and we wanted to talk about our model, our money flow relative performance model, because we were able to pick this up. We were able to see in our model that SVB being really one of the worst names in our model relative to all the other banks in the Russell 1000, the regional banks, and even the big diversified banks. 96 days ago, we went bearish for a second time on SVB. You can see it right here. We have a period of time where it's red. That basically means the money flow, which is our blue line, and the relative performance, the bottom pane, was below the 200-day moving average in a negative trend. Now, the relative performance is very good, a very good indicator of the weakness that SVB had been experiencing. Really broke down the beginning of 2002. Our overall equity market model went bearish in December of 2021. So we were bearish prior to that, but you can see the relative performance broke down, which brought our overweight, most bullish reading, with positive money flow and positive relative performance to a neutral ranking. And so our model started switching gears just about the same point in time that price eventually broke trend. Then it broke below the 200-day, couldn't get back above it, and eventually the model turned negative. Right around April, the money flows broke down. Interesting enough, the relative performance actually led the money flows. But then the money flows kicked in, and that was the end for the name until around July. We turned positive on the equity markets in July via our money flow model, but then going back down into the October-November lows, it went negative again, and it never turned positive from that point forward. Where our money flow model and the overall equity markets remained positive, SVB went back into a tailspin, and we turned bearish on the name right before it gapped down, 2 days before it saw its first big gap down into the November lows, and then it rallied back to the 200-day, and the money flows never turned positive. It remained negative on our model. It never broke above the 200-day moving average, held that downtrend. So from a technical perspective, it was textbook. It was in a negative relative trend, negative in a price trend, and our money flows, it was persistently closing strong below, on high volume, below its arithmetic mean, which said that really the shorts are pressing hard on this name. It did have a little respite with the market in July, but it quickly gave way into November and had a final decline. And then with the rally, it never turned bullish. We had a lot of names in the banking and regional and big diversified banks that were overweight in our model and had positive money flows. SVB not being one of them. It remained negative and really is, well, it's now out of business. But we wanted to just show it today as a good example of how our model was able to identify a name to not own. We did not recommend owning. We really like the banks. We still do. We have a tremendous amount of money flows in the banks, and but not SVB. It's one that we've recommended staying away from for most of the bear last year, and most of the bear this year, all of the bear this year that we've seen. We've recommended to avoid SVB. And it's just a feather in our cap for helping our clients avoid a very high-profile bankrupt company. That's all I have for today. If you have any questions, please feel free to let us know.